Well, in an article by Neil Wallace in this week's Farmers Weekly, there's an offer floating around of $8.35 a kilo for lamb by one exporter in the North Island. But as our wonderful AgriHQ senior sheep and beef analyst has continued to warn, don't think that this is a precursor for what prices we can see this season. And joining us now is Mel Croad. Mel, Taylor Preston have come out with quite an impressive price, $8.35, and this is for lambs under 16 kilos carcass weight. You have been going on about this, though, for some time to continuously lower our expectations. Do you believe farmers are getting that sentiment?
Hi, Sarah. Look, I think AgriHQ subscribers should be getting that sentiment because it's absolutely what we have been saying since May, really, since we came out of lockdown, that please don't expect the market to perform the way it has in the last couple of years purely because of the influence of COVID-19. So, and that's when we were asked for comment on the $8.35 last week, it was really just an opportunity to put that message out there that, potentially this is a short-term offer for a special order, but by no means should we expect that this is going to be the new pricing level as we enter the new season. It's just, and I guess, we wanted to get that message out there because that price was such a lift on where we've seen the current market over the last few months. And I guess it was just to enable farmers and readers just to be a little bit realistic in their expectations and not expect that this is going to be around the corner.
Okay, heading into Christmas, where are you and AgriHQ starting to put those figures in terms of those November prices? Is it more a 7 or is it more a 6 in front of it?
Look, when we did our September livestock outlook report, we were still sort of indicating that prices would be still above $7, but with the view that the markets were going to come back. And I think, that's really key. If we look at where we were last year, we had overseas markets just banging down the door looking for as much lamb as they possibly could get, and were prepared to pay record prices for it. And I think, if we stand back and look at how that market progressed last year, it was really rosy, and I think we possibly underestimated just how strong things were then. But we also didn't have COVID-19. So right now we're still dealing with a pandemic, and it's still there throughout the world. It's still impacting demand for our red meat and our lamb products. And so we just have to bring that all back to expectations at the farm gate. And look, I know, myself included, we always want the best money possible for our lamb, particularly new season lambs that you've worked so hard through winter to get up to those weights. But we just have to be mindful that the markets aren't as strong as what they were this time last year. We have done relatively well since our own level 4 lockdown back in April, May. We have seen prices at the farm gate sort of nudge higher. But we are just cautioning that the $9 a kilo that we saw last November is off the table. We're not getting those signals from our overseas markets that they're suddenly going to ramp up demand and pricing. And we're talking to exporters and meat companies and a lot of contacts every day and every week. So that's the picture we're forming at the moment, and that's the message that we're continuing to give to our subscribers, that yes, prices are going to be softer than last spring, but I think we've also done relatively well given the current market environment that we've sort of had to deal with over the last 6 months.
Absolutely. At least our markets are still open and keen to trade with us. Driving it from China in particular, in terms of taking frozen over fresh retail chilled meat, why are they being so conservative, do you think?
Look, there's a couple of things there. I guess too, everyone's always cautious at the moment that we may see reinfection rates of COVID-19 increase. So frozen does give markets the versatility instead of chilled, and chilled is always, priced higher too. China has traditionally been a high volume frozen market. There are a few restrictions around getting that chilled product into China. It's something we would love to dearly see more chilled going into China, and I think we are working hard on that. But it's just consistent with what they have demanded in previous years. Unfortunately, we're not seeing the same volumes going there as in previous years. But, I mean, that's reflective of all markets. Everyone's just a bit cautious, and rightly so as well. We've seen significant turmoil in the food service sector and the restaurant and cruise ship sector, which is, it's a large part of a market that we heavily rely on, and it's traditionally been a really good market for lamb. So there's a lot of factors there that are just all coming and and not so much pressuring prices, but just keeping that lower level. It would be great to see more demand, and we are starting to see some markets sort of show some signs of improvement, but it is coming off a really low base, and that's the key message too, that any upside starting from a much lower position than the last two springs. And so we've got to be mindful of just how much markets can, push that up. But we definitely do need to see an improvement above what we are seeing now, purely because we're at the start of the new season, and our supplies out of New Zealand are going to grow and continue to grow into the new year. So we've got to see some more interest in our products going forward.
Thank you so much, Mel. Of course, Mel Croad there, Senior Sheep and Beef Analyst for AgriHQ. This is Sarah's Country.